Let's just try to make sure we live. There we go. And we are live. This is Travis Witherspoon from Trade with Travis. Carter Cow Trading on Facebook, Trade with Travis on YouTube. Hopefully everybody's doing very well on this Monday morning. Very excited to be able to speak to everyone and be able to get started with all of the stuff that we end up talking about and being able to look at some overall trading pairs. So that's what we do here. So with that being said, get ready to go through the disclaimer as I place in all of the shared links to be able to make sure everybody can be able to get started. Please make sure that you end up paying attention to this because it's very important. I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision. Now, understand that Forex involves risks. It involves risks of being able to make money, also involves risks of being able to lose money, so please keep that in mind. Understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you're going to end up making money today. So with that being said, as I go through and get everything else situated with the charts and move these two boxes out the way. Oh, I'd rather do that before we get on camera. Show my face on the camera. What's going on, everybody? Hope everybody's doing very well. This is a Tuesday edition of Trade with Travis. This is a 30-minute live session where we end up looking at overall Forex pairs. We look at mainly U.S.-based pairs because we're close to the U.S. market. Typically, right around now, the London market and everything else is right around lunchtime, so not necessarily the best time to be able to look at those pairs. But if there are opportunities to be able to get in, then obviously we'll take a look at those and see what we can be able to do with those for us being able to get in. But with that being said, we actually end up starting our first. Session of the boot camp yesterday. You did not take get an opportunity to be able to sign up for the boot camp. You still can be able to do so. All you have to do is be able to go to bit.ly/believe in yourself Forex and be able to hop in. We actually ended up having a very good informative session yesterday. And I'm very excited to be able to talk to the new people that actually are being able to come in and being able to go from there. That's one of the things that we love being able to do here. We love being able to teach people the basics when it comes down to Forex trading, be able to get them to a point to where they're very confident in what they're doing. And once you end up getting to a point to where you're very confident in what you end up doing, you're not afraid to be able to take a trade. And obviously that's the whole point of what we're trying to do. You want to be confident enough to be able to create passive income. The only way that you can be able to create passive income is by trying and being able to take that risk, basically taking that leap of faith and being able to go from there. Speaking of leaps of faith, I don't know if any of y'all seen on my social media. Finally ended up getting all of my parts for my new PC. So my new streaming, trading, gaming, teaching PC has actually came in and literally got all of the parts. And I ended up having a dedicated video for that. So if you're interested, if you like talking about gaming PC setups, obviously we end up going through and talking about what's in that and why I end up choosing them. But let's talk about what happened earlier today. The pound actually ended up having unemployment rate, and they ended up having average earnings bonus that actually ended up coming in. All of those were very good compared to what the overall numbers were. Other than the employment rate was better than basically 0.5%, which was actually good. And then the average earnings were actually good. We'll go into what's going to happen a little bit later on today. Consumer confidence is going to end up coming out for the United States dollar. We're going to end up having trending CPI and consumer price index. That's going to end up happening a little bit later on today. So once again, today is another one of those trader's days to where you just look at the chart, you just kind of see what's going on, and then after that, you make the best decision based off of the chart and not based off of what's actually happening within everything else. So please take the time to be able to actually understand that and be able to go from there and be able to make your decision on what's actually happening. With that being said, let's take a look at. I want to take a look at the currency strength beta before I end up hopping on to the charts. I want to see what's actually happening and kind of give us a good idea about what's going on. You can see that the New Zealand dollar actually ended up having a very good day, a very good time since about 5 o'clock. That started to push up, but there's really no movement in the middle. We see that the Australian dollar was very weak at a certain point, but it started moving just like with the New Zealand dollar. The United States dollar and the Japanese yen was stronger around 3 o'clock, and then after that started to have a move to the downside. So we're probably going to see a little bit of consolidation if we look at these overall moves. And that kind of plays off to what we end up talking about first off with the U.S. dollar index. We look at the U.S. dollar index. What are we paying attention to? One, we talked about consolidation. Two, we talked about going into the weekly. We had that tweezer top that was actually happening, and based off of looking at tweezer tops, you could be able to see what's happening from the backside. What's going on, Muhammad? No, I don't necessarily trade binary. That's not something that I personally do. I end up trading Forex. I end up trading indices, cryptocurrencies, and a few other things like that. If you're interested in being able to talk about a pair when it comes down to that, absolutely. Just type it in the chat box, and then after that, we'll go through it while we're going through this session. So looking at what's happening right now, we can see that this market has basically ended up hitting the top of resistance again, basically end up hitting support. So what's the expectation? If we're talking about consolidation, then that means that we'll probably end up seeing the market start to move up towards the resistance, then after that start to fall. That was the overall thought process going in on Sunday, being able to take a look at what can end up being the opportunity for us being able to trade this. So with that being said, I would kind of pay attention to that first move before actually being able to say, okay, well, what's going to end up being the overall long-term move? I think the long-term move is still towards the downside, at least for right now, where the weekly D extension is at 11,550. So if we're just paying attention to that, that will be my thought process for that overall move. But what are we looking at? Currently, right now, the market is in a no trade zone off of the 2 hour, but it has had movement to the downside with the United States dollar basically end up falling off since 3 o'clock this morning. We have another Pearson line that's actually happening right here where the market is actually pushing to the downside. So what's the overall expectation? Just like with anything, we want to see how this market is kind of reacting towards this trend line and seeing if it's going to stay past this trend line towards the upside, or is it going to end up breaking? Right now, I would say that the market is still considered to be somewhat bullish, even though we see the market starting to have that fall when it comes down to overall points. Now, we probably won't see that when it comes down to U.S.-based pairs. So we'll probably end up seeing that the U.S. dollar end up having a little bit of a fall, especially against like the likes of the New Zealand dollar and the Australian dollar, possibly based off of what we've seen with the currency strength chart. But right now, there's really no thing to be able to do with the U.S. dollar pairs, at least for right now, unless you're looking at being able to scalp the market. You're looking at swing trading, there's really nothing to do at this particular point unless you end up buying it as support and looking at being able to sell it up where the market was at 11,750 towards the overall top of resistance. So right now, I'm going to stay away from that overall pair. Look at U.S. oil. Remember, we're trying to buy on oil. We're trying to buy oil up to $67 a barrel. What do we see? Market actually ended up breaking the counter trend line towards the upside, and currently the market's at $53 a barrel. Remember, we ended up saying that this market ended up breaking out of this spot, gave us a little bit of a resistance break, and then after that started to push up. You may end up having a chance to be able to get in. If you did not take that opportunity, then that's fine. But we can see that the market is basically in the buy zone right now. So any time that you're looking at this overall pair for us being able to get in, I would say right now the overall move is towards the upside, and being able to look at an opportunity for us being able to get in towards the upside up to $67 a barrel. The only thing that I don't like is the weekly is basically in the sell zone. But right now, I'm gonna take that with a grain of salt and kind of look at what we're kind of keep that in mind. Now, remember, we have slight consolidation on the daily. That means that if the market gets up to 53.90 and does not make that move towards the upside, then that is a overall problem. But if we're talking about a short entry, being able to get in and see if we can be able to scout the market a little bit, the market is not necessarily in the buy zone, and we do have this overall bullish candlestick to end up having a little bit of a movement. I will look at the 15-minute and see if we can be able to find a entry out the 15-minute before taking a opportunity of being able to get in. So we go to the 15-minute chart and seeing if we're basically in the buy zone based off of a counter trend line break, then I would take that entry from there. I'll place my stop loss below the overall swing low, below 52.20 if you're going off the 15-minute, and then after that, targeting 53.90 as a overall pair being able to get in. So overall, I will look at seeing how this market kind of reacts towards this overall trend line. Once it breaks towards the upside, then after that, I will start looking at considering being able to get in. I will place my stop loss. If we're looking at it from this spot, but if looking at scalping, my stop loss would be below 52.20. and being able to look at an opportunity for us being able to get in at that spot. Target from here will end up being the top of resistance at 53.90. I think that'll be a good enough risk reward, depending on how this market basically ends up breaking out of this overall trend line. So once again, if you're looking at being able to scalp the market, oil giving you an opportunity, you got to wait till the 15-minute ends up crossing over. Once you end up getting that opportunity, then after that, look at being able to get in or being able to trade that overall pair. And being able to go from there. Hopefully that makes sense when it comes down to being able to take a look at that for the overall trading opportunity. Let's take a look at gold. Gold is in a particular spot where we've been talking about. We wanted the market to be able to retest the bottom of this overall area of this channel and being able to get in. We say every time it ends up getting to a point to where it touches that channel, and it gives us the opportunity to be able to get in, especially in the buy zone. Anywhere around 1850 will end up being the spot where I would like to be able to trade. And currently right now, it's holding off at that spot. It's above the actual trend line for right now. And we're seeing that it may end up giving us another opportunity. I might see that the market right now is not necessarily in the best zone to be able to look at because it's close to the sell zone, meaning that buyers basically exhaust all of their movement to be able to get it back up to that point. But what I would end up paying attention to is this market going to end up remaining to be above 1850? And if it is, then after that, we have an opportunity of being able to get in. We can get rid of this trend line because that trend line already happened. Remember, we started collectively basically getting in right around 1824 and 1806 if you was able to get in below that low. And currently right now we're just waiting to at least have this market start to push up. Remember, the overall thought process is that gold going into 2021 to 2022, it's going to start being able to push up towards 2169 and 2300 because of inflation. Remember, stimulus checks and everything else ends up coming out. If you look at what's going to end up happening for the overall pair, then now what you'll end up paying attention to is that with inflation happening, that means that the dollar will end up being overvalued. Or devalued. That means that people will end up looking at stable things like gold because gold holds its value very well. Then after that, you'll start to see the movement. Okay, so let's keep that in mind as we're trading this one. I'm going to stay away from this one right now, and go from there. So, what are we looking at? We're seeing that oil is actually going up. We're seeing that the U.S. dollar is going down. U.S. Canadian dollar will actually end up being one of those pairs that I would look at if we're trying to take advantage of that overall movement from that thought process. We look at gold and we see that gold is right now at a standstill, and the U.S. dollar is basically at a point to where it's basically starting retracing consolidation. Then that means that U.S. yen is not at a particular point where we want to be able to get in either. So we see that the New Zealand dollar, United States dollar was basically starting to move bullish, and we looked at being able to trade that towards the upside along last week. So I'm going to start off with the New Zealand dollar, United States dollar, and let's see if there's any type of opportunity to be able to get in for that overall movement. Okay, so what was the expectation? 2 hour. We wanted to be able to buy. When this market ended up going into this gray zone right around 71.50, and then after that, have the market to be able to fall. We also end up saying that if you did not get an opportunity to be able to get in on that move, we wanted to be able to catch a counter trend line break based off of this overall movement the first time. So it gave you a chance to be able to get in the first time. You was in a little bit of a drawdown. If you end up getting in the second time based off of this overall movement right here, then you would have been good. It actually ended up giving you a third time to be able to get in where it fell down towards those overall spots, and since then the market has popped back up. And that ended up happening. That had to end up happening right around that 5 o'clock time because that's what we're seeing off the currency strength meter. Now, what's the overall thought process? We say that the New Zealand dollar is going to end up going to 7,300. Okay, if we're looking at being able to look at getting in on this overall pair. First off, we know that we got we see that the market is basically going bullish and it's starting to push bullish a little bit more. We fell down to that overall soft spot where we thought that the market was going to end up going to. We thought that the secondary spot would be right around 70.20, but that has not happened as of yet. If I'm paying attention towards this one, kind of like what's happening with oil, we already have a movement on this overall market. This market doesn't move as much when it comes down to total pip range a day. Market has moved 21 plus 31 plus 23 is 31. Okay, it's 45, somewhere around there, plus another 14. So right around 60 pips already. The market typically moves about 70 pips a day. So we're looking at this overall movement and seeing how this market is going to end up reacting. I wouldn't jump in now. That wouldn't be the thing I would do. I would wait for the market to kind of fall back and see if we can be able to get a movement towards it falling back. We can see that on the 15-minute with it being so overbought at this particular point. I'll wait for the market to fall back towards this area. If it falls back towards this area and uses that little resistance as a future support, kind of like what it did right there when it retested and then pushed back up on that short squeeze, I will look at being able to get in somewhere close to this overall movement with the market basically falling down. If that happens, it gives us the opportunity to be able to catch it right there, then I'm very much interested in being able to buy at that particular point. I'll be going after 73. 73 is basically that low main point right there. Long-term traders, if you're going out there, be at 75.50. But short-term, that'll be the thing that I'll be looking for overall. And being able to take that. Let's talk about U.S. Canadian dollar. We haven't talked about U.S. Canadian dollar in almost a week and a half now. We go to the weekly and take a look at this overall pair. What is the overall expectation? Excuse me. Expectation. If we're looking at this from a trading perspective, we are ultimately somebody else came in like. I appreciate that. Ultimately, what are we looking for? We're looking for the market to be able to start to push up from this 127 area. If the market does fall down below that area, then it's going to go down to 125 very soon. But we've seen that it's hovering around this overall support. We've been talking about how we wanted to get into this a few weeks ago, right when elections and everything. I mean, right when the market was basically right here at this particular point. That was right before Christmas time. Currently, right now, we're still in that same area. So if we're consolidating in that same area, then that means that a lot of buyers are basically end up saying, hey, this is a collection zone for us to be able to get into, and we can be able to buy this up to at least 130 towards a overall spot. Now, that's something that I'm very much interested in, being able to say, okay, well, if we place our stop loss between below 126 possibly, and we can be able to get a lower price, then maybe interested in being able to buy. Overall, I can see clearly that the market is basically bearish. But the market has hit a overall market has hit a D extension, which means that the market is going to end up retracing at some point. So I'm more in line with saying that the market is going to go up compared to the market is going down, if that makes sense. Now, we can see that by having this morning star that basically ended up happening right here. And since then, the market ended up having this retest, and the market is starting to make its move right here. 2 hour, what are we looking at? Okay. 2 hour, we can see the market falling down. This will be my thought process if I'm looking at being able to get in on US CAD. I will want the market to be able to continue to fall down. See that oil's starting off the day having a pretty good move at this particular point. I want the market to be able to get into the buy zone off of the 2 hour right around 120, right around 127, or right around the 126.80 area. If we could be able to get in right around that area, I would definitely love to be able to get in. I'll go ahead and make that position. I'll place my stop loss below 125.80 as a overall scalpable position of being able to get in. That means that I'll be going after 130 as the overall long-term position as this market is basically moving. So essentially what will happen is this. We're looking at this market being able to fall. If it falls down to 126.80 and then after that starts to push up or even goes lower than that, then that means our risk to reward. Our risk will end up being right around 97 pips or 100 pips going after 324. That's a 1-to-3 risk reward ratio. I like that entry. I like that entry strategy of being able to go after it. I want the market once again to go into the buy zone before that actually happens. Now, based off of the way this thing is actually looking, this seems like it's going to end up taking a little bit of time for it to be able to move. So this will be one of those ones to where you have to swing trade it and be comfortable with allowing this thing to be able to work in the background while you're actually doing other things. So that means that you don't necessarily need to allocate all of your money to it. It just means that you need to make sure that when you're looking at it, you're trying to get a solid position that you can be able to get into, but know that you're not betting a farm off of it. But I do like that position. I do like that risk to reward. I want the market to be able to follow towards that position. Once that happens, then I'm interested in being able to get in off of that pair. Okay. So US CAD, that's something that I am interested in being able to buy. Well, keep this in mind. U.S. dollar, remember, it's still working through that consolidation between the U.S. dollar index and working up to 127. Or 11,750. So we're looking at that, and we're seeing that oil starting to make its move slightly toward the upside. If it's going to end up consolidating a little bit, just like what I think it's going to end up doing, and after that, we should see that push up when it comes down to US dollar. Okay. And once again, we're talking about 100 pips risk compared to being able to go after that. I think that's a very good fair shake when it comes down to being able to get in. We got one more. Let's take a look at one more pair for Forex. Let's go back to what we ended up talking about with the Euro Australian dollar. What was the plan with the Euro Australian dollar? We ended up talking about this from a daily perspective. We ended up saying that the market was going to go up to 160 to 163. Currently, right now, the market is getting close to the sell zone, and we're seeing less movement and we're seeing less momentum, with the Eurozone basically pushing back up to the upside. Honestly, we're seeing a huge move to the downside at this particular point. For me, this means that I'm only up maybe 40 pips because I got in at 156.50 and at 157 respectively. So I'm up 19 pips on one, and I'm up right around 30 or 40, around 30 pips on the other one. So still being patient on this overall pair. We can see that the market is getting close to the sell zone. If you don't like what you're seeing for this overall pair, especially with this long wick that's actually happening, you may want to bag that. You may want to bag those overall pips and be able to put that in the put that in the bank, and then after that, look for a lower type of move. That does happen. You are a little bit more confident in being able to be a little bit more patient in this overall move. It's kind of like what we've seen with the U.S. CAD, kind of like what we've seen with a few other pairs. Just want to see, possibly see if you can be able to get back in with this market moving a little bit lower, with the expectation that the market is going to end up moving to the upside. Now, with that being said, market has moved a solid amount of movement toward the downside since the market has actually opened up. Talking about right around 70-something pips to the downside, so it's eating up a lot of profit. I would look at being able to look at least being able to get rid of one position. See if you could be able to get down and see if you could be able to try to get down into a lower position and be able to trade from there. I just don't like what I see for this overall movement towards the upside, but I'm still going to keep in my position right here. Might as well keep that one in and see how the market kind of reacts. If the market basically gives us another U-turn and we can be able to get in from there, would be good. But bag the one, make 15 pips off of it. Not necessarily the greatest amount of pips that you could be able to get, but we still have another position in, and then after that, we can be able to ride from there. Okay. So that is Euro Aussie. Take a look at US 30. Now, we talked about this yesterday. If you paid attention to what I ended up talking about yesterday, congratulations. You made yourself a pretty penny based off of this overall movement. We talked about this a little bit earlier. What was the expectation? I'm sorry, now it's 100. Now it's 100. Yeah, you made yourself a pretty penny off of this overall movement and being able to go down. 2 hour. What are we saying? Market is pushing bullish. We know that the market is going to 14,320. That's the overall expectation. It doesn't mean that the market is not going to fall. That was the overall expectation going into Sunday to Monday trade. The reason why I said that it was going to end up falling was because the market ended up hitting a 2 hour D extension at 11,559, and then after that fell. Literally, as we speak, the market high was at 11,569, and then after that dropped almost 300 points to the downside. It couldn't have gotten more better than that overall move that we ended up talking about yesterday. We said that this was a retracement drop. It was going to end up falling down. We were talking about the certain areas that you could be able to get out at. The first area was at 13,400. If you got that spot, you literally got that within the first 2 hours. The second spot where the market ended up falling at, I'm trying to figure out why it fell at 11,211 and did not push up to the upside, or it did not push any below our second take profit, which was 13,142. Once again, beggars could not be choosers. It fell down into this zone. People started eating it up right around that 11,200 area. I was able to manage and get out right around 11,256. Bagged in about $300 worth of overall profit. and we started to move back up towards the upside. Now, from here, what's the overall expectation? Well, we can get rid of this fib, and we know that this market has already moved throughout this overall fib, and it's done. So now the expectation is, where's the market going to end up going up to this point? Market ended up retracing the 30,255, which was the 382. And that's the reason why the market ended up falling at that position and basically holding at that position, because typically when the market goes to the 382 or at least to the 382, then the market is at a safe place for it to be retraced. Now, we are seeing a U-turn, and this market is starting to move, and it's at an R2 position, and we see that the market is starting to push up. We're in the third, or probably in the second to last wave of this market moving up towards its overall D extension. Remember, the long-term D extension off of the daily is 14,320. So that's the long-term move. The short-term swing in between that would take us up to 14,065. So the question is, can we find lower prices to be able to get in? Is the market going to give us another fall price before getting in? If the market does give us another fall price before getting in, you'll probably see it at 13,400 before the market basically ends up moving, and that's already happened already. If you got in this market when this market actually ended up making a crossover, kind of like what my EA did, right around 13,400. Remain to be in that position. Just be patient on this market, basically moving from there. Currently, right now, you look at it, and this is that's US 30. Let's see, I'm actually not in NAS 100. I actually changed my settings for. Okay, so I'm going to do that one manually. If you look at where we are when it comes down to overall spot, the market has broken the counter trend line back up to the upside, and then after that started to push up. Did not get in based off 15-minute timer. I would not try to get in right now, or I'll wait until about 9 o'clock to see how the market's going to end up reacting. Then after that, starting to push up toward the upside from there. Currently right now, I think that it's not necessarily the greatest position to be able to get in. Because we're basically in no man's land. We're not in a tradable position. This is an area where people lose money. Anytime that you end up falling down to a control point or anything else like that, that's where you make money. Right now, I'm not interested in being able to trade a position where you can end up losing money. All right, so we'll come back to that one and take a look at it tomorrow. US 30, as we end off today, what is actually happening. Market keeps on falling back to the spots where we end up getting in and get out earlier. The market literally fell back to the original position where we started out that hedge a couple weeks ago, which was at 30,820, I believe, 850. Currently, the market is at 31,055, and we were looking at the overall movement. Market did hit the D extension, which was expected. Now the question is the market going to continue on moving to the downside? It's going to end up moving up to the upside. Then a lot of consolidation from this overall spot. We can get rid of this field, so we can place it right there. The new B is right here. Currently, right now, we're paying attention to what's happening off of that spot. It's getting dangerous, close to breaking that A off of the 2 hour. So I would say that the market is more bullish than it is bearish. We're paying attention to that. And since we just hit this high, I'm already up $182 off of this movement. I got in at 30,943. I don't like how it's looking, and I'm about to get stopped out if my moving average ends up taking me out of this overall pair. Might as well show y'all this right now. I'm gonna go ahead and bag this profit of 185. Okay, so this bagged in 185 for its overall movement towards the upside. I'm happy for us. That actually ended up getting into Ethereum towards the downside. We'll see how that kind of moves, kind of makes the decision from there. What are we looking at from the daily off of US 30? US 30, we talked about being able to sell, or at least seeing that the market was going to end up selling off a little bit before starting to push back up. But we're seeing that this market is really kind of holding this overall range of 30,900 and staying in that overall spot. So we're looking at small consolidation between this area right here. And there goes our tops. We can call this our natural support, and the market has tried to fall down there, but it has not broken yet. So I'll kind of pay attention to where we are when it comes down to that. If you're looking at buying, I will buy up to about to 31,250 for the overall spot, and feel comfortable where you're at on that. But you're not interested in being able to trade consolidation, then I'll stay away from this one. Okay. So that's pretty much it for today. If you learned anything or you like what we end up doing, please make sure that you like the Carter Cow Trading business page. Please make sure that you end up subscribing to Trade with Travis. Take the time to be able to do that. Obviously, if you want to be able to hop inside of the boot camp, remember this is a full week-long boot camp. If you're interested in being able to do that, all you have to do is go to bit.ly/believe in yourself Forex, hop inside, and you'll end up getting the email links and everything else like that for actual meetups that we end up doing live. So like always, thank you for your participation. Thank you for asking questions. If you have any more questions, once again, don't hesitate to be able to hit me up on any one of my social media platforms, and we can be able to go from there. Like always, plan your trade your plan. Everyone, y'all have a good one. Take it easy.